Hello everyone, welcome back to my channel. So here we are, it's the end of the week 3 of our Road to 200k challenge, and this has been quite a different week relative to the previous one. A few things have been going on, and so I will explain briefly as usual what has been what happened in each of the days of the week after Monday evening. So basically on Tuesday, as you recall from the last video, I sold some puts on 4 because of course it was part of my strategy to lower the average price of my shares so that I then could try to sell them at a cheaper price without incurring in a loss, but because of the markets appreciated or rose on Tuesday, the puts on 4 were the value came down to 1 cent basically, and so that is why on Tuesday I was able to sell them at 1 cent. Let me see where the trade is. Yeah, so this is it. So I managed to buy back the puts that I had on 4 at 1 cent. All right, and then I used the cash, the collateral released from these puts, and so I sold some puts on HIMS. All right, the next day. Why I had to do it on the next day? Because this trade, the buying back of the puts of 4 occurred very late in the session, and so I was not able to roll over the cash into the puts on him, so I had to do it on the next day. So here it is. And then and of course, why HIMS and not 4 again? Because HIMS for me is a priority because it's a more volatile stock, and so it probably would be the most worthwhile to get rid of it first. And so it was a kind of a funny development, because soon after I sold the puts, the stock price began to fall, and for some time even fell below the strike of 15.5. all right, but ultimately the price managed to stay by Friday above the strike price, and so the puts were not assigned. Also on the same day, on Wednesday, the puts that I had sold on American Airlines, which you can see right here, all right, they also fell down to 1 cent, but I decided not to buy them back. And as you can see here, I sold initially the puts for 3 cents, all right, and so I received 6 euros on this trade, and the fees were 70 cents. So I had a net cash in of €5 and $5.30, but to sell the puts back at 1 cent, meaning I would have to pay €2 or $2 for the puts plus a commission. So just for the price of buying back, I would have a net profit of $3.30. So if the commissions were for some reason higher, and there was no indication of how much the commissions would be, there was a risk that it was either a break even or a loss. So I decided not to sell them back and let them roll down to maturity, because the price of American Airlines stayed above 10, or rather close to 10, for most of the week, and so the probability of buying being assigned the puts at 9 with a strike of $9, it was extremely unlikely, and so I decided to let it expire worthless yesterday, Friday. On Thursday, the markets made a big recovery following the news that the US inflation rate for July came below the expected and reached the lowest level since March 2021, I believe, so just before the inflation surge in the post-pandemic environment. And so this makes even more likely basically that the Federal Reserve will have to lower the interest rates on the next meeting, which will take place on September the 17th and 18th. And so because of it, investors were even more buoyant or hopeful that this scenario will eventually come to fruition, and so markets rose sharply, I would say. And because of that, the puts that I sold on Lyft were also fell down to close to 1 cent, but I could not buy them back at 1 cent as I tried to, and so because the trade was never filled. But now I believe that next Monday, it will be the trade at 1 cent will be possible to fill up. So I will buy them back for sure, because since the stock is currently at 11.23, it's extremely unlikely that within 5 trading days the stock will come back to $9 unless something very unexpected happened. And of course, because I did not sell any calls on Lyft, probably I will also try to sell some calls on this with a strike price at 14.5, which was the acquisition price of the stock, to make sure that at least I get some premium out of these shares. Yesterday, on Friday, it was a rather mundane day as far as I can remember. I could not, due to work commitments, I could not have a very, very close eye on the market. But apparently, by the way things are today, nothing exceptional occurred. And so the puts that I had expired, all puts expired worthless. And so basically, I cashed in all the premiums on those puts that I sold. Before we go into each of the trades to put in our scoreboard, I wanted to express a word of concern, because as you can see right here, the calls that I sold on American Airlines with a strike of 11, which is rather below my acquisition price, and here as well, it's for me the possibility of these calls being assigned, and I would be forced to sell the shares at 11, both Ford and American Airlines. It becomes a little bit more likely, and you can see that in the price. The price now is more than the price at which I sold, so that's why I'm incurring in a unrealized loss here. And so it gives me a little bit more concern, especially Ford, because Ford currently is 10.51, so it's becoming a little bit closer to the strike price. Hopefully this will not be assigned, so the price will stay below 11, so that in that way I would avoid having a capital loss. But we'll see, and you can now see why, having been probably a bit greedy on wanting to sell calls on the shares to make some money right away, probably it was not a bad decision. And so this is a learning lesson also for me, because next time probably I will not sell the calls, just like as I did with Lyft. As you can see, I had no calls on Lyft sold, and so probably I will wait a little bit more for the markets to rebound a little bit more in order to sell some calls on the shares, and also by doing that, those calls will have a higher strike price, and so I will have less of a risk of coming out of having to sell the shares at a loss. But these were the main developments for the week. So let's see how can we register our trades. And so as you can see here, these were the trades, the remaining trades that we put in on last Monday. So here we have very few trades to register this time around. So as you can see, it's only these ones, because due to the circumstances of the previous week, I had to extend the maturity of a lot of options, and so a relatively lower amount of them expired this week. But we will see how things went, and so as we fill our scoreboard. Alright, starting first and foremost here, we have to close out this trade for the puts that I sold on for initially. So I bought them back, all 8 at 1 cent with a commission of 2.37. All right, so these are the puts. So here at 1 cent and with a commission of 2.37. In here, this was on the 13th. I closed the trade on exactly right the next day. Alright, let me push the formula a little bit further down, because this is correct. This is exactly the day after, as you can see, August 13th. Alright, so because of the market's rebound, the puts lost value very quickly, and so that's why I ended up having a very nice profit on an annualized terms, of course. But it was a very sweet profit in this regard. Next up, here the puts on HIMS from the collateral released from the 4 puts. I sold 5 puts on HIMS with a strike price of 15.5. So we have to input this trade again. All right, so HIMS, it was a cash covered put here. The strike here was 15.5. This was on the 14th. So here, right, let's delete this. The maturity was 3 days later. This one also, as we can see right here, this puts went expired worthless. All right, in the same way as the other puts that I had in here, so we can close out both. They expired at value at 0, so they were not assigned. All right, so we can also do this in here. All right, so this expired at 0 here, and here it was also 0. These were 5 puts, and I received for them 15 cents each. And actually, as you can see, I got a credit on the commissions, 175, which is also very good as always. All right, so minus 1.75 here. Actually, very sweet again, very nice profit for the time it took. It was good. So let's see the rest of the trades. The calls that I sold on Pfizer at 29, the stock, of course, these stocks I bought them last week because the puts were assigned. Now they expire worthless. The stock for most of the week stayed between always below the 29, which was a strike price, and it was the price at which I bought the stocks. So at some point it went down all the way to 27.5, but then rebounded a little bit in the last few days. So yeah, it's not the ideal result. I would rather have the cash back from the proceeds of selling the shares, because I want to have the money to sell more puts, especially on HIMS, to press forward with my strategy of trying to get rid of them as soon as possible. But yeah, this is how the market turned out to be, so it is what it is. Not a huge issue. These are good shares. These are good quality shares, so we'll keep them for longer. We'll keep earning those premiums, so that's not a problem. So these puts expire worthless. This trade was closed, as you can see here, and so let's see what else is in there. So the trade, yeah, so the HIMS puts both were registered, the Pfizer as well, and also the American Airlines puts also expired worthless, as you can see right here. So these are the puts on American Airlines. All right, this is it. They also expired worthless. These expired. All right, as you can see, not nearly as good as return, of course, because the premium was very low. And just to make a simulation here. If I had followed, if I had sold back the American Airlines stock, and let's just say, for example, that I would have to pay these 70 cents again as a commission to leave the trade, yeah, it would have been almost a break even, very non-material, and of course with a much lower return. Of course in here it would not be the same, it would be only on 14, so let's just see how much would have been. It probably would have been, yeah, it would be on the ballpark of 26%. So in a nutshell, it would have been almost equivalent, all right, an equivalent trade, but because we never know how much we are going to be charged in terms of commissions, I decided not to take the risk. As you can see here, and just to show an example, so the return ended up being the same, almost the same, as you can see. But I'd like to show you here that, for example, this trade right here, it was only one option that I decided to put in with a little bit left of buying power than I had. But because even though expired worthless, but because it was just only €1 that I received, but I had to pay 154 in commissions, the option expired worthless and I still have a loss. So this is the kind of scenario that I wanted to avoid this time around. And so yeah, it's not a trade that I regret, especially because the return ended up being the same in both ways. So this was a less risky approach, and so yeah, no problem at all. And so yeah, this is it. All the trades are registered. As you can see, the remaining ones are trades that are expiring either the next week or the week after, in 2 weeks time. So this is it for the time being. These are pretty handsome overall, pretty handsome returns for this week. The profits, let me see how much was in terms of gains, but yeah, it was just 237. So we still have a few trades ongoing which were done this week. So nothing really special. Let's push this a little bit further. So we will see what happens next week. For the time being, this was a shorter video than usual, as I mentioned before, and also thank you for the person who posted a comment in one of the videos. I did not forget what I promised to do. I have to do another video to explain basically why the wheel strategy in options trading is a winning one in the long run. And as soon as I will have time to do that, for sure I will, and I will post it just for you guys to really get the ins and outs, the inner characteristics of this trade that makes it a winning one in the long run. But that's a topic for another video. I appreciate all of you guys and all your support. Feel free to like the video and subscribe to the channel and leave your comments below, all right? And we'll get together on Monday in the evening to show you the other trades that I will post for the following week. Have a great weekend, guys, and I'll see you all on the next one.